Welcome back to another Stock Market Open Live. It is already, can you believe it, the last day of the week. What a crazy week. I mean, we went through a coupon expiration, we went through a Fed day, we went through CPI, PPI, and would you look at it? The day is, quite frankly, the market is still at least existing. The world hasn't collapsed around us. Roaring Kitty has closed his call options and increased his ownership of the company in GameStop to within disclosure rule requirements and 9 million shares strong. You've got GameStop actually up in the pre-market following this. Pretty incredible. And you still got a little bit of a rotation down on Enphase. Tesla's up a couple percent in the pre-market, finally getting a little bit of that run that I think it really deserved to get yesterday. But yesterday what's interesting is I think there was almost this like tenuousness in the stock market where people had to be convinced that the vote was officially official. The market just did not want to give any kind of real reward to Tesla beyond this nominal 2.9% that it gave it. And we really just didn't see 190 again, other than really in the pre-market after that first announcement that Elon's share comp plan would pass. Now you're looking at another 2% in the pre-market, so maybe a little bit of a slower start to that rally in Tesla. So what we're going to be watching today, let's see here. What are we going to be watching today? We're going to get University of Michigan consumer sentiment numbers. Those will be out in an hour and a half. Might be covering those in the course member live stream. And then, of course, really we're starting to look for, hey, how are some companies doing again with earnings? I hate to say it, but it's just sort of like, all right, well, I guess we're gonna go back to the cycle of, well, CPI and jobs and PPI and the Fed are done, so what are we gonna do now? Are we gonna pay attention to all the Fed speak? Probably not. Honestly, I think it's sort of getting to the point where it's like, how much more Fed speak can we take? I don't know, that's my take at least. We'll see. Anyway, we'll cover the big changes. There we go. Perfect. As they come up. Otherwise, it doesn't seem like we've got that many major catalysts ahead of us, which is kind of good. It should be, usually when you lack catalysts, you should be seeing volatility relax. You should be seeing maybe the market just slowly move up in acceptance that inflation's coming in lower, at least based on the latest reports. Who knows? And it seems like the bond market is taking some acceptance of that. You're down to about 4.2 right now on the 10-year Treasury. So 4.207, so a little smidgen on the higher side there. Now, as far as economic data, we are going to get import-export prices this morning. We're going to get those in about 1 minute. So we'll get the May readings for import prices month over month, looking for negative 0.1. Import ex-petroleum, looking for 0.2. So most of that really coming from the month over month, from sort of petrol and gas and energy. Export prices, we'll be looking at a month over month move of 0.1 with a year over year expectation of 0.6. So must be hitting some base effects there to get that higher read there. So we'll see. Anyway, this will give us a little bit of an idea of how prices are moving. Though really, our import-export prices are really going to be as much of a concern for us as our own CPI, PPI reports. Probably not. So somewhat nominal, but let's see what it is. Here comes the data. Wow, okay, import prices came in way low at negative 0.4 as opposed to the negative 0.1 expected. Ex-petroleum, you actually came in at negative 0.3 versus the 0.2 expected, way low. Then you had export prices month over month. Instead of going up 0.1, they actually came down 0.6. Same thing with, and then export prices year over year number did match that sort of 0.6 expectation. But otherwise, everything came in softer. Import prices, core import prices, export prices month over month, it's just all negative. Let's listen to how CNBC describes it. But this seems like good news.
HQ, happy Friday, happy Flag Day, happy Father's Day, and import-export prices for May hitting the wires. Down 0.4% on import prices. That's month over month. And, of course, that follows an up 0.9. What's interesting here is that every month this year has been a positive number. We just reversed it. We finished last year with 3 negatives in a row. So we want to pay really close attention to all the import prices. Maybe it gives us a glimpse of demand. If you strip out petroleum, it stays relatively the same, down 0.3%. Following up 0.7%. Now, if we look at those were ex-petroleum, let's look at import prices on a year-over-year basis. Expecting a number around 1.3%, it's up 1.1%, up 1.1%, which matches last month, which is still unrevised. Both of those combined are the best numbers in terms of the height of import prices, the highest numbers going all the way back to DEES of 2022. So you can see that these prices have been rather tame. Now, if we look at export side of the equation on a month-over-month basis, this is a big miss. Down 0.6%. We were expecting an up number. Follows a slightly revised up 0.6%. Down 0.6 is the biggest negative month-over-month export price change since the end of last year. Gives us a glimpse of what's going on potentially overseas. Finally, on a year-over-year export basis, and this is really interesting, coming into this number, we had 15 months of negative price changes on the export year-over-year. We just broke that trend with up 0.6. Up 0.6 is the best. I should say best. It is the biggest export year-over-year price change going all the way back to January of 2023. We see that.
Yeah. Anyway, but that one was right all in expectations as well. Now, one thing somebody in the comments is asking, does this account for differences maybe in volume? No. GDP does that, right? This is really just a level of price action. So what kind of price action is a certain basket of goods getting, like paper that's imported, paper mill products that are imported, a certain type. What do they cost 1 month versus another month? So other little measurements here, but mostly reiterating that sort of disinflationary narrative. Didn't really look like you got any kind of major moves in markets after that. Apple doesn't really look like it moved. Q's. Nope. Doesn't really seem like market cared today, which is somewhat along expectations. This is somewhat boring data, honestly. Okay, good. So, shareholder meeting was yesterday for Tesla. That's obviously over now, so good news for Elon and for Tesla broadly. Again, somewhat surprising. The stock feels a little stuck in the mud, but that could be a signal of sort of broader lack of euphoric sentiments. I don't know. Who knows? I maybe we'll be able to measure some of it with how GME trades today. Let's listen to what they're saying about it here.
Get to the long-term stuff. We've had a couple inflation reports this week. How did you process them?
No, it was welcome news. It was great news on the last FOMC meeting.
It's Loretta.
Wasn't it? Look, we've been working hard to get inflation down. We've been restrictive on our monetary policy. We've seen really good progress over the last couple of years on inflation. We're not there yet, but you have to look at the whole, group of data and be happy that we're starting to see inflation move back down again after stalling a bit in the first part of the year.
Did the last couple months of better inflation reads make you feel like the first 3 months of worse inflation reads were maybe just an aberration, a turn of the year kind of price change?
So the January number, we knew there were some issues with measurement in terms of residual seasonality, but not really. I mean, you take the data as it comes. We had a stronger economy, and there's some balancing between supply and demand. You're going to get readings, and you have to take the data as it comes in, which is why we say we're data dependent, meaning that we take the data, we think about what it means in terms of the trajectory of inflation and also labor markets, and then we set our policy to calibrate to that. So I didn't really change my view about inflation, but it is welcome to see that inflation is moving back down again. We'll just need to see that continue a bit longer.
So I want to ask an English question
bit
and a
longer.
math question, okay?
How much is a bit?
You said the Fed is restrictive. Are you sufficiently restrictive?
It's a good question. I mean, that's obviously an issue that we're talking about.
They never answer this question.
And this is about, how restrictive are you? Certainly, if you look at the effect of our policy so far, you can see it affecting the economy, right? We've seen it affect housing markets. We've seen it affect growth rates. We've seen it affect and bring supply and demand in the labor market back together. So it's definitely having an effect. Whether it's sufficiently restrictive, that's why we need to be data dependent and sort of assess where inflation is going. We've always said that we really need to have that confidence that inflation is moving down on a path to 2%. It would be inappropriate to keep rates at current levels until inflation gets to 2%. We're trying to always assess and looking forward.
That's the math question. I've had a nice correspondence with your former colleague, Jeff Lacker, both online and on air. We had him on. He thinks the Fed may not be restrictive enough, which I think Jeff has always thought, whatever. But and when you look at, what are you looking at in terms of your baseline for where the neutral rate is to judge mathematically how restrictive the Fed is?
So, in
These questions are so boring.
Economic projections, which each, participant on FOMC puts in, there's a long-run nominal Fed funds rate included in there. 2 SEPs ago, I raised mine to 3%. Okay, in recognition that there are a lot of trends in the economy that may mean that the higher rates are probably the neutral rate going forward. But at any point in time, right, it could be anywhere because estimates are going to be all over the map. Was sort of the neutral rate higher after coming out of the pandemic? I think so, for sure. Mm-hmm. We had disruptions in a lot of markets in terms of sort of the balance between supply and demand. We had labor market participation way down. As the economy evolves, right, you really need to assess, like, how restrictive are you? Are you seeing inflation move back to 2%? Are you seeing labor markets get into better balance? And we are seeing that, right? So now it's just a question of, do we continue on the path that we're on, right? Gathering more data, seeing inflation move down. And then once we get to the point where we're pretty confident that inflation is on that sustainable path, that would be a time to think about, lowering the degree of restrictiveness. So I think we can't say at any point in time how restrictive we are, but you can see it as the evolution of the economy happens.
We spend a lot of time thinking, okay, are they going to cut in September? Is this going to be a November cut? It sounds like you think a lot less about timing and more just about what the data starts to slowly bleed in. How many months, if 3 months to the upside wasn't necessarily enough to say, okay, we can't figure out a trend there, how many months does it take of inflation heading down?
Yeah. I mean, again, this is how comfortable are you in assessing where inflation is going, but also the risks around that outlook. Okay. So to me, I would want to see a few more months of good inflation data, inflation coming down, the short run inflation expectations starting to move down. And then, then you need to start thinking about, okay, this may be the right panoply of data and, portfolio of data, what's going on in the labor market, what's going on in inflation to actually move down. Because if you wait too long, right, if inflation is moving down, you're actually, by maintaining the current level, you're actually becoming more restrictive.
But hasn't that happened?
You have to kind of go.
Hasn't that happened? You've gone from just under 1% to now you're north of what, 2% when it comes to how real.
Yeah, but we needed to get. But remember, right? It's not that the economy is happening over here and our policy is happening over here. The policy is having an effect to bring that down. So you have to have these calibrated, right? You want to calibrate your policy to get inflation on that sustainable downward path.
Really interesting. The market is now pricing in 2.1 rate cuts in December. This has always been like 1.8, 1.9 over the last few weeks. That's interesting.
Right. It was very clear inflation, part of the mandate had to be key. Like the focus had to be on that. We had strong labor markets, inflation was going up and going up at a fast clip. We had to focus only on that, right? As inflation has come down, we've gotten more balance between our dual mandate goals. And you're exactly right. The challenge going forward is to assess the risk to both parts of our mandate, watch what's happening in the labor market, right, and take that into account, watch what's happening on the inflation side of the mandate, and make sure that we're doing the proper balance. And one thing that I've learned over the last 10 years as president and before that is you always make sure you're in a good position to be able to address risk to both parts of the mandate, right? And we're in a good position with policy right now. If things evolve differently than we anticipate, either on the employment side of things or on the inflation side of things, we're in a very good position with monetary policy right now.
One of the things we spoke to Janet Yellen yesterday about was the housing market, and given high mortgage rates, the lock-in effect that's happening.
Yes.
But as that also relates to the labor market, which is to say, if you're locked in your home, you may not actually go take a job somewhere else in the country or possibly somewhere else, even in your own state. How much do you think about that? And as it relates to housing, how much do you think about, it's not something I think a here and now issue, but 3 or 4 years from now, depending on where you think interest rates are, do you think that there's going to be a problem?
It's a tough, complicated question there. I don't think that's part of their goal.
So all the things you're pointing out are certainly things that are part of discussions right now in terms of how much is that affecting things. We have an inflation research center at the Cleveland Fed, and their work basically looks at sort of how long does it take the moving down of rents and new leases to feed through to housing inflation. And that's going to take longer than perhaps old models would suggest because of some of the issues that you're pointing out. Right now, the labor market's still very strong, right? So in some sense, that's probably lower on the list of things that we're concerned about, or I'm concerned about. But it is something that, as you think about how things are going to evolve, that's certainly one of them. And that's what's made this cycle so interesting in the sense that, right, a lot of these underlying structural aspects of the economy influenced where the economy was going. So if you think about the pandemic, a lot of those effects of the pandemic are still with us. They're having long-lasting effects in terms of labor force participation. Just think about what happened there. We're certainly not back up to where it was if you look at the total labor force, right? That's long-lasting, and that'll influence how you think about the balance between full maximum employment and inflation. And that's what makes this a challenging time, but also as an economist, an interesting time to think about.
But some people are afraid you're going to miss the turn here, that you've missed it always in the past, and now you're going to miss it again. And that they look, for example, at the inflation rate, which I get is part of a base effect kind of thing. But you guys, you missed the inflation progress last year, and now you're even forecasting as a group, the average official, an inflation rate that is higher than what we're probably going to get at the end of May. So are you missing it?
I'm pretty confident that the committee is doing good work here. We're a learning organization, right? We learned through time. We took on board sort of where inflation went, and it went higher than we anticipated early on, right? And then we took action. And again, that's why I think it's really important that we maintain, a good place for policy, because the economy could evolve differently than that modal or that median outlook that's in the SEP. So, we put in SEPs every other meeting. We're going to be doing that. The committee will be doing that going forward. I don't think that, the discussion around the table feels like, we're totally out of whack with what's going on with the market. If you look at sort of where the market is and where our assessments are, they've come together over time. So again, we continue to assess incoming information that feeds into our view of where the economy is going, and where the economy is going and the risk around our forecast influences our policy decisions.
But we kind of have to wrap, but I do want to give you a chance to reflect on 39 years at the Federal Reserve and 10 years as central bank. What's the best call that you made economically, would you say?
Well, I don't know whether I could say a best call, but one thing that I've learned over those years is that the Fed is a very strong institution. As I said, it's a learning institution. You come to the table with your best analysis and your views, but 2-1, I've learned something at every meeting I've attended, and I've attended under 4 different chairs, so I've seen a lot. And the chairs, of course, all have different styles, but they all come at it with the same view that We're working for the American public, right? We have a very important job to do, and that's what's in that room. And I've gotten asked this a lot of times. It's like, well, politics has to come into it. I can tell you, in 39 years, politics does not come into that room.
Does it concern you, though, that attacks against the Federal Reserve have increased over that period of time? I think there's always been questions about the Federal Reserve.
So reference to Trump, like, hey, are you worried that the Fed might get canned?
No president likes to see higher rates when he's running for re-election in particular. Do you feel like things have gotten more politicized over that time period?
Not really. I think this ebbs and flows, and the best thing we can do as an institution is to really focus on the dual mandate and doing the best analysis, bringing the best judgment to those discussions, and really putting everything else to the side.
But what do you think? I mean, front page article of the Wall Street Journal 2 months ago effectively said that former President Trump, if he becomes the president, wants to, I don't know if it's true, but wants to effectively end to some degree the independence of the Federal Reserve.
Yeah. Well, having an independent Federal Reserve in terms of our monetary policy decisions is very important. It allows us to actually set policy really focused on having the strongest economy we can have for the American
I
public.
actually do believe they should be pretty dang independent. Any country that is taking control over both is a country that sees its currency go to poopy-doopy pretty fast.
Feeling is that people will realize that this is a very good institution and it will be preserved.
Thank you for your
I'm going
years
to
of
make
service.
a guess here.
Yeah.
This is not the last time Loretta Mester is going to sit in that chair.
Yeah.
Maybe not as president, but
Yeah. So, I mean, think about, I mean, China's an example of one that still is a success, but it's also a currency that a lot of people flee from. It's taken a lot of government intervention to get people, or to get the Japanese or the Chinese renminbi stabilized. And usually what you find is trust is lost so rapidly when a government can control the central bank, because they just prop up their own administration, which works for a few years and then it doesn't, and you get rapid inflation and devaluation of currency. You end up with like an Argentina or whatever. Venezuela is another example, or Zimbabwe. These are all examples where the central bank just became sort of another arm of the government. It's generally not good. All right. So, Bitcoin is sitting at 67K. It's kind of been bobbing up and down by about $300 in the last 24 hours or so. Really sitting around that 68-8-ish level a lot, and then bouncing around there. Let's listen in here for a moment.
I've had so many messages on Mets Jets.
I know. I've got a lot of corrections as well.
Thank you, David. Thank you, Gerard.
Nothing exciting there. All right, very well. So, market open is 42 minutes away. We are looking for, let's see here. What is this? GPT-4 brings Moneyball logic to picking stocks. University of Chicago researchers. Let's change to here. Blah, blah, blah. Asked GPT to guess future earnings, and what they found could eventually have profound implications for finance and the economy. Researchers found that GPT could predict with 52% accuracy whether next year's earnings would be up or down. Right. Well, 52% accuracy isn't that great. You'd have to do a whole lot of betting to make money on a 52% odd. Yeah, I mean, I guess maybe this is just a little intro to the software they're trying to use. That seems nonsense. 52%. It's like statistically indistinguishable from a coin toss at 50-50. That's nonsense. Like, I'm sure that's within the margin of error of 2%, in which case you have nothing. I don't know. AI is an interesting, how should I say it, innovation. But Adobe seems to like it. Adobe raised their annual sales guidance. Saw a nice jump there in fiscal year expected EPS for Adobe. And their annual recurring revenue for the second quarter came in at $487 versus $433. It's actually pretty good. That's like a 10% beat on your next quarter forecast, and that's not just on EPS where you had a beat, but on annualized or annual recurring revenue. It's phenomenal. So you've got a solid 15% bounce here in Adobe stock, moving all the way up to about $530. You can see it's been on this rough downtrend since about February, where it was trading as high as $638. It's now bouncing off of this floor of around 528, shooting up above 531. This is the opposite story that we got for Restoration Hardware, which continues to see margin pressure and gave a little bit of a decline of an outlook. All right, what are they talking about Hasbro here?
The price target now $80, implying just about a 35% upside move from where it's trading at right now. Analysts say the toy maker's digital business is accelerating. They also add that the business has increasing upside overall for 2025. Shopify also moving higher, this time on an Evercore upgrade. Analysts saying the recent pullback in the stock, you see it right here, down 15% year to date. This is making an attractive entry point. They go on to say that Shopify is a best-in-class e-commerce play with the ability to sustain revenue growth right around 20% and free cash flow approaching 20%, bringing it closer to that so-called rule of 40 for SaaS stocks. All right, today, obviously, a lot of talk about EVs with Tesla. Stellantis, you can see it right here, down almost 4%, moving lower on comments from the automaker's CEO about arrogant mistakes in the U.S. market, including manufacturing issues at U.S. plants and holding too much inventory. Despite all those issues, CEO Carlos Tavares still maintained guidance and said there would be cost cutting, including reducing headcount in an effort to be more competitive in the EV space globally. Again, shares of Stellantis down just about 4%.
So I still have this thesis that at least in the next 2-3 years, if you're going to buy an EV, the Tesla is like such a great choice if you're going to buy an EV. And everybody else is really taking the back seat to Tesla, which is quite remarkable. Look at what the Qs just did, by the way. I want you to mark this line if you believe in it. But look at this. This is a 478.39 line. This is basically our all-time high. So I have a line drawn on the all-time high, and we could see this rejection here pre-market. Failed breakout, reject. Watch this in the pre-market here. Again, a near perfect rejection right on that line. So very, very important. Are we going to be able to break the 478.37 today? We're about $1.60 away from being able to pull it off. And new all-time highs on the good old Qs. All right, let's listen in here.
But all of this has been overshadowed, and some of this has really played out into the forefront of these discussions, the domestic issues these leaders are facing at home, most notably when it comes to Emmanuel Macron. You have Meloni talking to local press saying that he's using this forum for electioneering purposes. Rishi Sunak has found it very hard to get a date at this G7, to have an official bilateral on the agenda with a G7 leader, because they all know that in 3 weeks' time, he is likely not going to be leading that country. And then as well as Olaf Scholz, who's dealing with really poor poll numbers and a strong showing from the far right after the European parliamentary elections. So you see this gap in what electorates want the officials to deal with and what they came to the G7 to discuss. And I asked the World Bank president about this, and has it been difficult, this really attack on multinationalism when you see a rise in nationalism? And he talked about how it's chauvinistic. Take a listen.
One of the biggest things that worries me is chauvinistic nationalism, because it tends to create the absence of connectivity. But I think if you look at the last few months itself, we've managed to get capital and hybrid capital and portfolio guarantees into our institution, and we are the one that's working with this multilateralism.
That capital going into the global south and places like Africa is a point that the United States wants to counter China, but also individuals like the Prime Minister of Italy, Giorgia Meloni, to try to stem the flow of migration they are seeing from the continent.
Anne Marie, as you suffer on the southern coast of Italy there, I'm just curious, can you explain to us what's chauvinistic nationalism?
That's funny. As you suffer there, it looks awesome. I want to go on the beach.
He was trying to make was that,
well, in the ocean or sea, probably.
This nationalistic approach that only their country matters and their issues matter. I think what the World Bank president was trying to get at is the fact that he thinks it's short-sighted, because when you look at putting capital to work in places that are in need, like Africa with food security, energy security, actually it could benefit individuals at home when they're dealing with things like growing migration, because people from some parts of the global south are suffering for things like trying to get a job. I did also ask him about what potentially Trump 2.0 would mean, because this World Bank has also wanted to take a look at not just countries that are in poverty, but also making sure they're focusing on things like climate change. And would that kind of approach be difficult with the Trump presidency? And he was quick to say that it was under Trump's first term that they saw a capital injection. So he's not concerned and thinks that...
Wow, bullish response there on Trump from the World Bank.
Whether or not it's going to be Biden or Trump 2.0.
AMH, we've got 30 seconds. What's on the menu today?
Oh.
Well, the menu for me is certainly going to be a gluten-free orecchiette and...
Oh, my Lord. Okay, all right.
Preliminarily announced that...
Could have said anything. Could have anything. And that, yeah, okay, whatever.
Rock and Vanguard, who are 13% of the votes, decided to break rank with the proxy voting recommendation to vote no. So that was a 26-point swing out of about 75% of the share base that voted. And that's really what tilted the vote.
Okay, so that's a big deal. Having said that, even though you think this is a positive catalyst for the stock, you have an underperform on it and a $120 price target. That is well below not only where the shares are today, but even the 52-week range, the lows of the last 52 weeks. What makes you think that the shares are going to come down that far? What did you hear yesterday at the shareholder meeting?
Fundamentally, we think Tesla is struggling. So Tesla still believes it's going to grow its units this year. We believe that units will be down. And if Tesla does try and grow units, they'll have to cut price pretty materially, eating into earnings and cash flow. But the stock, we believe the stock will do less than $2 in earnings this year. So it's trading at about 90 times earnings, about 75 times our number for next year. And this is a company that's not going to grow this year and will likely grow very modestly next year. And we think there's a disconnect between the fundamentals and the current stock price. And I think part of that is driven by the fact that this is a aspirational company. And that's what we heard at the shareholder meeting yesterday, that Elon wants people to dream the dream. And the dream ultimately is, that Tesla's going to be a robo-taxi company. Tesla's going to be an intelligent robot company, and those are big markets and can ascribe very large valuations to that. And so that's the implicit tension in the stock, that today is not particularly good. Elon Musk is casting a vision of what something really could be in the future, and this is
all I see.
Oriented stock, and so we see some enthusiasm for that.
An angry bear.
The stock and against Elon Musk have lost their shorts.
Historically, they have. Certainly this year that's not been the case. The stock's down almost 30%, market's up double digits. So it has been a significant underperformer this year, as I think its growth trajectory has slowed. And my belief is that could continue to be the case.
Okay. Tony, one final question.
Yeah, the growth for Tesla might be flat to negative this year and next. The idea is, does that set you up for glorious 30-40% growth rates again in the years going forward thereafter, which is what the market then has to start evaluating on, okay, how do we price in the future growth after the adjustment?
It's a third-party valuation before repeatedly. And again, I think that cultivates the shareholder base that is largely retail focused, and trying to paint a picture of what a dream could be. That was pretty striking to me. I think the other thing that was notable was that there was a picture of 3 uncovered models, foreshadowing that Tesla will bring to market 3 new models. Yeah. I think Elon said some people may not think or will think they won't be amazing, which suggested to me that these will be sort of incremental tweaks on existing models rather than truly new models.
Got it. Tony, I want to thank you for your time today. We appreciate it.
My pleasure.
By the way,
Yep.
happy Father's Day,
Oh,
Andrew.
thank you.
Happy
Thank you.
Father's
Thank you.
Day to my father, to my husband, and to all you dads out there.
It's very nice of you. Thank you. Thank you. Maybe we get to sleep late. We'll see.
What every dad
Final
wants.
check on the markets. We only got a couple seconds to do it. Dow off, NASDAQ off, S&P 500 off. But we will see where we end today.
But
Have a great weekend,
Tesla
everybody.
is up.
Happy Father's Day.
1.7 right now.
The street begins right now.
I just want to start off by saying, hot damn, I love you guys. Yeah.
Elon Musk celebrating yesterday at Tesla's annual meeting after shareholders did ratify his 2018 pay package. Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are softer. Europe's under some pressure. The focus once again on France. Equities not able to enjoy more disinflation today, and import prices 10-year hugs 4.2, lowest in almost 3 months. Our roadmap begins with what's next for Tesla and Musk as his pay package and the Texas incorporation resolutions were approved by shareholders.
Well, yesterday it was Broadcom. Today it's Adobe riding that AI rally. Those shares are surging on quarterly results and guidance that was raised. And of course, we'll stick with tech. Why not? Apple and Microsoft continue to battle it out for the title of most valuable company in the United States.
Let's begin with Musk's pay package being approved by Tesla shareholders. Jim, it was not close. Some 77%. He's got Vanguard to thank, it looks like.
Yeah, I also think that there was a belief that there would be an existential crisis without Musk, that Musk certainly could take his bat and ball, go home. The energized Musk is very exciting for me because maybe he has something up his sleeve. He tends to have something up his sleeve. I remember that Jensen Huang continuing to tell me, do not call it a vehicle company. This is an autonomous machine. David, an autonomous machine has many uses. Vehicle, minimal uses.
What I think is so great is that you can still value Tesla as a car company and make sense of it as an investment, meaning any other additional benefit that comes out of it from a cash flow point of view, Optimus, insurance, AI, whatever, FSD, it can be bonus.
On him as a result of creating enormous shareholder value over the last 6 years, not so much the last couple of years,
No.
as we pointed out many times. Just to remind people, that pay package was at the time in 2018 worth some $2.6 billion on a $59 billion market cap at the time. Obviously, fast forward, we're talking around $50 billion, let's call it, on the current market cap.
But 8% of the company.
Yeah, it's going to be dilutive.
Yes,
now,
it is.
You're going back to Delaware court to get this thing ratified, and it's not completely clear what Chancellor McCormick is going to do here, but with the reincorporation in Texas and the fact that you've put it to shareholders again, and they have once again overwhelmingly.
The reincorporation in Texas is really just a way to sort of spite Delaware for the judicial ruling over the 2018 shareholder-approved compensation package. And I'll tell you, when Elon does something like that, it has massive implications for other people. Like people here in real estate, people ask me, they're like, oh, a DST? A Delaware statutory trust? Wait, did I hear Delaware? I don't like Delaware. Can we pick a different state? It's like, no. DSTs are based in Delaware. And this is a special little loophole that you can 1031 exchange into a real estate fund. But it's really interesting just how powerful that sort of like Elon messaging is of like, oh, stay away from Delaware. It's like, oh, wow. It's kind of, let's just say it's probably a bad day for the governor, and the judge probably doesn't get affected too much.
Robots are being made by Tesla. He says we sell them for $20,000, we make $10,000 in profit, therefore we make $1 trillion, and I'll let him pick it up from there.
I'm confident of the prediction that there will be more, like the ratio of humanoid robots to humans will be greater than 1 to 1. So that there'll be, more than 10 billion humanoid robots in the world, probably 20 or more. And Tesla's going to be by far the leader in that.
He reiterates
what he
you
was,
had to
what,
say,
what
man.
we were hoping he would say, and we have him obviously, is they're going to get a 20 multiple on $1 trillion in profit. So it's going to be a 20 to $25 trillion market cap opportunity.
Well, look, this is the missing piece of the puzzle about what NVIDIA was saying at the GTC, which is it's robot. But no one's taking them up other than this man. And he has so many of the big chips from NVIDIA that I have to believe that he is going to be the guy who creates the form factor that Jensen dreamed up to begin with. It's very big. It is. It's very big.
But can you really imagine a time in which, again, there are 1 billion robots being made a year? Maybe he talked about as many as 10 billion robots eventually.
Look, there's an element of
and
hyperbole.
That they are 10% market share, and therefore they're making 10,000 on each robot. I mean, is that really a possibility, Jim?
Well, look, I'm not going to rule out anything with this guy, but I would say
kind of love this discussion over the robot. It's like realistically, it's so far out before it's actually going to start being profitable. Let it start functioning and maybe helping with margin at Tesla first and having an impact. That's for it to actually show up and have an impact in margin at Tesla alone. It'll probably take 2 or 3 years.
So, yeah, I mean, he has 100% of some market. He's the only one that seems to be doing it in scale.
He is throwing a lot of numbers out there, Jim. 50% gross margins. You make it for 10K, you sell it for 20K, 2-to-1 humanoid-human ratios. I mean, we take all this to the bank?
I don't know. When he told me that all of our power, 5 years from now, all of the power in our country would be generated by a big solar field in northwest Colorado 12 years ago, and that's when he got angry at me because I actually questioned that. I think he is a person who has dreams of possibilities, and we got to appreciate that. People who think big, but when they talk as big as thinking big, it gets people a little too excited about the stock.
As for the EV business, Jim, he did say tough sledding, but he did seem to ratify or endorse year-on-year delivery growth for the year.
Well, I had Patty Poppy on the other day. She's from Pacific Gas and Electric. She says they still got great growth in California. California is 1/5 of the country, but if you had China in, the growth would be insane.
I'm not following you.
The Chinese cars are 10,000. So we put a big tariff.
The growth of what would be insane?
The growth of EVs if we let actual Chinese.
If we allowed the Chinese.
If you let Chinese vehicles into the United States, oh my gosh, car prices would plummet. It'd actually be a great thing for the U.S. consumer. I think consumers would have so much choice. Ironically, though, you're kind of, as a Tesla investor, looking at the U.S. government going, we're not going to let that happen. And so you get a larger moat and more margin.
State in China, of course, that is certainly the contention of our government.
Who's Musk supported by?
Who's Musk supported by?
Yeah, the free market.
Yeah, that's right.
Well, the Chinese
harder to operate.
I mean, Chinese, BYD, they got a tariff under 20% in Europe. I mean, you can't beat the Chinese if they're subsidized.
We've made
they
this
can't
point.
beat them.
The Chinese have lowered their price points. By the way, there are battery technologies where they really make it up because they're the leader in batteries. That's where all the stuff's made.
It's like 90+%.
I'm not wrong.
No, you're right.
And so they're able to incorporate the batteries, and I guess they continue to drive efficiency there. And
well, how can he beat them?
And the quality of the automobiles is improved.
Fantastic.
So I don't know if they're fantastic. Have you been driving one? You haven't driven one?
My wife just drove one for 7 days in Italy, and she said this thing was amazing. A $10,000 car. $10,000. This is just so much better than Tesla. It's just fantastic. Don't look at me like that.
She drove a $10,000 car and said it was better than a Tesla?
Well, kind of, yeah. What?
All right.
Well, yeah, okay. Maybe she was given to hyperbole. Well, I don't know.
Well, speaking of that part.
I don't know. I still think it would be interesting to see. I would love to have some Chinese cars in America just to be able to compare the difference, too. I don't necessarily want to go to China to figure it out.
Talking valuation of Tesla.
If the price earnings multiple is, say, I don't know, 20 or 25, something like that, that would mean a $20 trillion market cap from Optimus alone. And probably 5 to 10 from autonomous vehicles. So, I think it's actually conceivable, it's within the realm of possibility for Tesla to achieve a valuation 10 times that of the most valuable company today.
Tony Saganaki a moment ago saying he just don't hear that very
Well,
much.
I think Kathy Wood would say those are very conservative
30,
numbers.
$30 trillion.
And Ron Barron would say, why is he lowballing?
Within the realm of possibility that it will have a $30 trillion market value. There's a lot of things within the realm of possibility, I
It's better
suppose.
to do that than it's better to dream big than say, listen, I think they could go up 10%.
You're right.
I think you have a 10% increase.
Dreaming
I mean,
big
what's Farley saying right now at Ford?
Dreaming-
Look, we could do
Tim
7%.
It's true.
7%.
Dreaming big's never stopped this guy, and that's how you.
But that's
how
what you do.
That's how you get a giant
I don't
rocket.
know. I take a much more simplistic approach to valuing Tesla. I just look at, if I could get back to 35% growth going into 25, 6, 7, and 8, that'll give me 4-year future earnings. Yeah, this year earnings are going to suck a little bit. You're going to get $2 of earnings. Call it $1.90 is what you're paying for the stock now. So you're trading about 95 times. And if I can get 30% growth on forecast, I am sitting at a 3-1 peg. For a manufacturer, it's a little bit on the high side. Yeah. But let's see if that growth can actually exceed rather than continuously disappoint. Ideally, you want the growth curve to have bottomed by now. We'll see.
Robots, and we won't have to worry about any of this. And by the way, who knows who's going to be here talking about whatever, because the market's going to be run by machines too.
Yeah,
So don't worry about it.
There's 3. That's the 3 that I care about. That's what I care about. See them?
I did.
They are not stooges, my friend. They are the winners.
Speaking of which, take a look at the pre-market here. We're going to talk more about the broader market after a short break. Some good desk notes out of J.P. Morgan today, Jim, looking at whether or not you continue to barbell cyclicals in tech.
I don't know.
Yep.
All right, so looking at the sticks themselves, looks like this is Tesla down about down to about 1.4% up. You've got Bitcoin can't hold on to 67, Enphase down 1.5%. Apple, this is going to be like probably its second day in a row where we're really flirting with red, but could potentially be the first day it's actually red at 40 basis points to the downside. Still pretty bullish, Apple, Tesla, just the amount of euphoria that has gone into them has been a set of euphoria that is way smaller than what you would usually get.
High yield, and those are the places that we want to play because we think there's a global growth convergence. And that actually sets up opportunities in some of these segments that I mentioned that have been out of favor and therefore offering significant yields. And that's more attractive to us than treasuries, for example. At 4.2% on the 10-year, we think growth is going to be higher than expected going forward. So we're not really all that interested.
All right, not time to take duration risk here. Jay, really enjoyed this conversation. Have a great weekend.
Yeah, 10-year down at 4.23. It's not as low as it was about 30 minutes ago when we started, when it was down at 4.20.
Abigail Doolittle.
Well, Katie, we do have futures lower, but before we take a look at what's dragging, let's take a look at what is absolutely soaring, and that, of course, is Adobe. Shares are set for the best day since 2020, this after the company put up a good quarter. Importantly, though, they gave a really strong sales forecast for some of their creative products, suggesting that there is demand for their new AI products. Anything to do with AI, as you know, really creates a bit of a stir, and that is certainly happening with Adobe. As for what is dragging on futures this morning, if we take a look at both the shares of Apple and Microsoft, these big tech names are sliding a bit here in the pre-market, not for any particular reason. Apple, of course, on the week into today, up more than 8%, so a little bit of consolidation.
It's also true, yeah. When you look at it sort of over a week period, you're up a lot on Apple and Tesla already.
Bigger names that are, or I should say bigger decliners. Stellantis, the company did give an update, and they are saying that it looks like at least they're losing share and struggling with an inventory pileup. As for the shares of RH, they are absolutely plunging, down 15%. The company formerly known as Restoration Hardware, a loss of 40 cents per share versus closer to a loss of 10 cents. It seems like demand is pretty weak. Investors not liking that. Again, that stock down sharply, down 15%.
All right, Abby, thank you for that update. And coming up, presumptive GOP candidate.
Such a hit when you see something down 15%.
I just want to thank the Republican Senate, and I want to thank also the House. We met, as you know, with the full House, Republican House today, and we had a tremendous meeting with them also, and there's great unity.
We'll take a look at some of his promises next. This is Bloomberg.
To be clear, that's Trump talking about great unity within the Republican Party. He has become the unifying force If you voted against Trump and you were a Republican, you had an 80% chance of losing your job, because 80% actually did. And to look at, like, I always look at Mr. Vance, somebody who is a never Trumper runs for the Republican Senate seat in his district, and or the Senate seat as a Republican, and now he loves Trump. And it's really interesting seeing how many politicians have sort of aligned with the Trump vision once they're a Republican. It's just like undyingly clear. We already saw this on Loretta Mester. They're doing some recap here, so we might get them to leave a comment on it. Let's see what they say.
We've always said that we really need to have that confidence that inflation is moving down on a path to 2%. We're not going to, it would be inappropriate to keep rates at current levels until inflation gets to 2%.
As Cleveland Fed President Mester on Squawk this morning, for her to say that the recent data set is welcome news is kind of a big deal.
I thought to myself, well, wait a second, maybe this is the new freed up Mester. She actually is not someone who has periodically done many bad things to the stock market and the bond market. There. Okay? Look, she served well. The new person's very good. But she did her job. I cannot say I agree with her very often at all.
But you do now.
Well, her goodbye is very sweet.
And meanwhile, I mean, there's the 10-year inching above 4.2, but it was below. It was 4.19 a bit earlier.
Even though we had these auctions
I saw
this week, the auctions went very well.
I don't doubt them, but that's interesting. Yeah, it's moving up again, the yield.
The three stocks for almost the entire market.
Yesterday, at one point, we had 80% down volume, and the market was flat.
I know.
These giants are doing yeoman's work.
Yesterday was Broadcom. Today will be Adobe. Adobe was extraordinarily good. This can't continue.
This being what?
You can't have three stocks be the whole market for a stock. It's just not. It just doesn't work.
Here's NVIDIA.
You have to be worried that. I hate to have Mester be positive, me be a downer, but you have to be worried that the whole market's just five stocks. With a lot of it, we've lost so many bull market. We've lost drugs, we've lost banks, we've lost rail.
Yeah, it's gotta broaden out a little bit if we want it to keep going, and it might. I mean, the Qs keep trying to break that all-time high level. That's what they keep getting rejected on right now, because they hit their all-time high just a few days ago. GameStop, interestingly, still up about 55 basis points. No large selling after Roaring Kitty discloses he's moved from options to now 9 million shares, and he's now a reporting owner of GameStop. Kind of cool. Really cool moment.
Yes, things are good, and then they came back at a rival conference and said, hey, sorry, got to cut numbers. And there it is. That's what everyone's worried about.
We do have about 17% of the S&P bank sector at 3-month lows. That's the highest since October. Although, Jim, B of A getting an upgrade over at KBW.
Yeah, I thought that was interesting. They had some good things to say. It's actually been a bit of an underperformer, but I can't get excited about this bank group because I just feel like, wait a second, we got to find out who else is Huntington. Huntington's a good bank. They're not. It's not a joke bank. It's a really good Ohio bank.
Do you want to tell people?
Boring. There's just a lack of news today. I mean, I know we have consumer sentiment coming out. That'll come out at 7 a.m. And so let me see what the expectations are for that. We are looking at 72, 3.2 on the 1 year, 3.0 on the 5 year. Okay, so really. Expectations aren't expected to be hugely different.
He will continue down that path. His reasoning for going from 21 to 20 is, of course, that it's a nice round number. For the CEOs in attendance, it's a nice big figure. So they're not sitting there thinking about the former president just 2 weeks out of getting a guilty verdict and therefore standing in front of them as a convicted felon. They're looking at someone who will be much better for business, possibly much better for business going forward.
It's very human, right? The focus on big round numbers. We can all relate to those figures. But tell me a little bit more about the guest list. We talked about 100 CEOs.
Don't care. It's so boring. Don't care about your exclusive party.
Yeah, as I drank Schlitz, they promoted me.
You were not an Eagle Scout.
No, I was a Schlitz drinker. Just Schlitz. Remember that? It was the beer that made Milwaukee famous. I don't know.
Rheingold.
You go win. Go win your Eagle Scout.
Joe and Mika drinking Old Milwaukee this morning on Morning Joe.
Really?
Yes. And in light of Trump's reported comments about the city yesterday.
Well, there you go.
We'll get Kramer's Mad Dash countdown to the opening bell. We'll dive further into Adobe. Got some upgrades of both that name, Zscaler, Hasbro, Shop in a minute.
Yes. Curious to see how Adobe ends up today. It just bounced off that 517 level in the pre-market, and I don't know why, but I have a line there for it. It might just be a fib, but clearly that 517 had a little bit of a movement there. Yeah, it's a fib. So, and that's traced from, I want to say we set it up as the high of the 638, which is where you've gotten rejected 3 times, and then you created this pretty large downtrend here. Not a great looking technical pattern, but let's see if these earnings can now flip it around for Adobe. Good old Adobe. I mean, I use them daily. I don't know that I pay much more for the AI stuff, but whatever.
Roundtable group and spoke earlier in the morning and shouted out some of the CEOs, including the CEO of Walmart, that he has worked well with. But, you know, again, his tax plan is not at all the business-friendly tax plan that Donald Trump is touting. Biden rather wants to raise the corporate rate to 28%. He wants to impose taxes on wealthy Americans. A lot of the people sitting in that room would have been affected by the taxes that Biden wants. So it's a very different approach. The message that the White House has for CEOs is, look, Biden represents stability, rule of law. You're not going to have the chaos that you had of the Trump years.
Well, let's talk about one of other Donald Trump's proposals here. He also
that's a pretty common thing I hear. It's like, hey, well, with Biden, don't worry, nothing will happen because he doesn't even know what's going on. That's what some say. And then others say, I don't know, there's a risk of breaking something with Trump. And then others say, you got to be kidding me. He did fine 2016 to 2020. And then you get sort of like statistical comparisons, which you can do because they've both been prior presidents. And now, of course, one started COVID, the other one finished it, so it's gonna be really interesting how it goes. How the people vote. Does seem like Trump edges out a lead at the moment, at least. That can all change very quickly leading up to an election, by the way.
Small business cuts, estate tax cuts in 2025. So no matter who's president, whatever the makeup of Congress is, there's going to be a big tax negotiation, and that's one of the things that Republicans want to do to pay for future tax cuts.
Well, Sri, I'll give you the last word in about 30 seconds here. I would imagine that the CEOs who were in the room like tax cuts of any form, but what's the sentiment check when it comes to tariff hikes?
Well, and this is something that has been discussed, right? For a lot of these business leaders, it isn't necessarily, some of them it does matter a whole lot, but for a lot of them, it's important to know what the path ahead is, whether there are tariffs or no tariffs, or what the levels would be at. What they can't get comfortable with is the unpredictability. And that's...
I didn't even notice that, Max. Max just mentioned here, I took small profits on Bill at $53 after we did an analysis on them. Yesterday, they crashed over 5% by the courses people. Well, thanks for saying that, Max. Yeah, obviously not a... You know, when people just say things in the comments, obviously I can't verify these. They're not like a testimonial or whatever. It's not trying to pitch the course. It's just saying, yeah, we did an analysis on Bill, and I'm curious what happened to Bill. Yeah, yesterday they were down, gosh, at a new all-time low, $48. What happened to Bill? Let's find out. Must have been some news. Bill, big block trade, that's it, at 50-50, no? Bill Holding Inc.'s, an insider sold $134,000 of shares. I mean, that's a pretty nominal amount. So, I don't know. I don't know.
Let's say thoughtful. It's like, I want a picture, and you describe it, and it comes up. And I just think that what Shantanu said that was really important is there still has to be a human creativity aspect. And this is what you've been saying over and over again. You can't disassociate humans. You can't make them so they're not important. And what Shantanu says is that if you really want great generative AI, It's the human factor that makes us great, not the gen factor.
And it's an important point, not having to do specifically with Adobe, but the jobs right now, even right now, and the training being afforded younger people in organizations are those who really know how to use AI, to Shantanu's point, effectively.
Exactly.
You are a query engineer, which is what you're talking about. Because that becomes very
we talked
important.
about the Key West Russia issue in the Meet Kevin pod we did a couple days ago. You should check that out. I think it was, we titled it Tesla's About to Explode or something, but it's a full podcast on various different ideas. So let me know if you like that.
If you want to do something that requires some thought, well, you got to program the thought. You can't just and you have to fool around with all the different. There's many different clouds. If you were to go get the suite, David, which I recommend, the $600 suite, you can literally you could do NBA program. You could create NBA players.
All right, let's come back to the stock. So what does this mean, the strong quarter?
Okay, well,
guidance?
finally, JP Morgan, which has sat out this whole
Give us a
period
longer
of
term here,
underperformance.
please, instead of this one day.
I'm using the JP Morgan goes from hold to buy. Sat out the underperformance and saying, listen, it's really going to come back. They do have the low end solved. They were worried. People worried they were going to lose the imprimatur of universities where it's all used. And then the high end, they're basically.
Yeah, a lot of people really like that podcast. Yeah, it was called Tesla Stock is About to Explode. It has we opened up some of the Tesla beer here. This was it. So let's see that Tesla stock is about to explode, and we'll see. Maybe the beginning of the explosion will be today. I don't know. 1.77. It's still a little bit nominal, though. It does seem like there's some enthusiasm going in. We got about 2.5 minutes to go. 3.5 minutes to go before the bell. So, should be fun. We're getting close. Getting close to the bell.
Trading session, working the phones.
Oh, okay. Yep, show her working the phones. Okay, why? I guess, I didn't listen to it. I just like, working the phones. It's like, the reporters are working the phones, the TV anchors. Okay, so 3 minutes away. I don't think that University of Michigan's going to be much of a trading catalyst today. If you were nervous about it, just wait until like 7 a.m. And the biggest thing to be nervous of would be inflation expectations going up. So if inflation expectations on the 1 year break up to like 3.5 or something, that would be bad. Or the 5 to 10 year starts de-anchoring and you go to like 3.3, 3.4, yeah, that would be bad. We don't expect that. We expect 3.2 and 3.0, but you know how it's been with data. Anything can happen. Yeah. Okie dokie. Where sit we? 2 minutes remain. I feel like that's like a Halo line. 2 minutes remaining. Isn't that a Halo line? I'm pretty sure it is. I love the Halo lines. That's why we did this one.
Gain the lead.
But Halo sound voice. Now all grunt sounds. Ha 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 ha. That's funny. Oh, here it is. Does it go? Oh. Yeah, I wish some of these were in you gotta get the same voice actor in like other games as well.
Triple kill. Double kill. Triple kill. Kill-tacular. Killing spree. Running riot.
I love that. Killing spree. Anyway, all right. So about a minute and a bit here now from the opening. It looks like Tesla's trying to pump it up and going right into the open as Apple stays negative by about 30 basis points. Microsoft is negative by about 84 basis points. And we are now moving into the final minute of pre-market. Somebody's asking what the Woolulu, that's what it is. It's called the Woolulu is from. Woolulu. That is An old generation of Age of Empires. The new monk conversion sound isn't as cool. They lost some of it. All right, folks, remember to get your life insurance in as little as 5 minutes by going to metkevin.com/life, a paid promoter of the channel. You can also get up to $200 by going to metkevin.com/Coinbase to sign up for Coinbase. And if you want to trade stocks, check out Webull at metkevin.com/Webull. Get up to $3,000 in stocks, potentially.
15 days you can get your pizza. And your pizza is going to be so revolutionary.
Let's get the opening bell, wrap up this eventful week. At the big board, it is the Black Legislative Leaders Network ahead of Juneteenth, of course, next Wednesday at the NASDAQ.
That's a pretty red-looking open. Let's see if we can turn it around. Let's see where things are moving. Unfortunately, today, also, our next course member live stream will be on a Monday. So just a quick fair heads up. You've got a big red candlestick here on Tesla. And yeah, I'm also going to keep this stream a little shorter today, unfortunately. But don't worry, all is great. Microsoft down basically 90 basis points here. Apple's trying to recover, not sure if it's going to be able to. Enphase went from negative about 1.5 to positive there. Here comes oh, no, never mind. It looked like it was trying to form a green candle, and then as I was saying that, there was a giant red candlestick. Okay. Nvidia's trying to pump it up. Bill.com stays positive. Adobe's trying to stay positive at 16%. Supermicro, I don't really see a lot of movers here. You do have GameStop moving at about 29, and might be getting a rejection there at 129.59 on Enphase for potential move there on the day. Gosh, it's just such a weird sort of like bearishness that's just in the air, right? It's weird. Here we go. Come on, push it, Green, push! What is this? Anyway, we'll watch what happens. First 15 minutes are always really quite volatile. Doesn't seem like we've got something that's really breaking out. Let's take a peek at ARM here. No, not really. One of the big movers here we know are Adobe, but they're back to where they were pre-market. Tesla's only up 65 basis points right now. Yeah. Trump, DWAC, where are we with DWAC? Oh, DWAC back in the 30s, back to 38 bucks. Adobe 15, Tesla, it's trying to come back to, now it's at 1% again. Just bobbing around that 1%. What's our BTC signal? And then what's Robinhood doing? Robinhood 24 basis points, fine. BTC. Tried to break out there, but gave up. Bummer. Anyway, like I said, I have to keep today a little shorter, so I apologize for that. So I'm going to go ahead and play this while I look at some more sticks. And always remember to come back. Every day the market is open for the market open live stream. Look at Tesla trying to bounce 183.34, getting a bounce right here. Let's see if we're getting some more bounces on the market. And let's see if Tesla can hold it while I play this.
Go yourself.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Happy Father's Day weekend, everyone. Does look like you're trying to push a little bit of some green out of BTC. Look at that, trying to push some green there. It's pulling coin up with it. ARM's trying to trend up. Adobe is losing it. Probably going back to the 517 line here, honestly. And, ooh, Tesla loses the 183, goes for 182. Have a wonderful Father's Day weekend, everybody. I love you all. Really appreciate y'all being here today. Sorry it's a little on the shorter side, but don't worry. We'll make up for it with length in the future. All right. See you later. Bye.